Hi, welcome back to the channel, The College Process. Once again, I'm Ed from Principia Prep, and today we're going to be going over day trading and Bitcoin and their effects on financial aid. But before we begin, if you are new to the channel and are looking for additional college content, please hit the subscription button down below. It will notify you when new videos do come out. As well as I also want to remind everyone about our scholarship initiative that we started this year, the James RUSSO Memorial Scholarship, which this year we're trying to, with your help as far as the viewers out there watching the videos here, to give out as much as $15,000 this academic year for the senior class of 21-22. Also, that being said, if you enjoyed today's video, please leave us a like. It does help the channel. And if you have any questions throughout the video or any comments, please leave them down below. We do answer all your questions and comments if you watch our other videos. So any questions you have, just leave them down below and we will answer them for you guys. That being said, let's jump right into today's video, day trading and Bitcoin and their effects on financial aid. Now, to start off with, nowadays, there's a lot of people day trading and also going in and out of cryptocurrencies and so on and so forth. And based on the economy opening up and many things happening as far as things getting better, we're seeing a lot of people showing a lot of gains in either the crypto and or the stocks that they bought. And a lot of families obviously are sitting on a lot of capital gains. And you're probably wondering, how does that affect us either through the crypto or through the stocks as far as the gains we have? How does that affect us for financial aid? And that's what I'm going to be going over in today's video. Now, let me give you an example. Let's just say that you put in $5,000 as a starting investment, either into a crypto coin or into a stock, and all of a sudden it kind of just blew up. You got super lucky and the stock or the crypto went up as far as value goes, and you're wondering, what should I do right now? Because you're sitting on a lot of gains. Let's just say that the $5,000 you put in became $20,000 in value. So you have essentially $15,000 of unrealized gains. And now here you have an interesting dilemma on your hands, because in the world of financial aid, most of the forms you'll be filling out, whether it's the Fafsa form or the CSS profile form or any institutional forms, essentially, they're all on the honor system, which means essentially you get to tell them how much you have in investments. Now, the way it works is this. There's only one way the schools, by the way, check your information that you put on the financial aid forms. And the way they do that is by asking for your tax returns. So essentially, an unrealized gain is not going to show up on any of your tax returns, because until you actually make that a capital gain by actually selling that holding that you have, whether it's crypto or stocks or etc., until you sell it, the unrealized gains are basically just sitting there on paper, but the financial aid offices can't see it essentially. So once again, it's on the honor system how you want to disclose that or not disclose that, so on and so forth. Obviously, every family situation is different. I'm not going to delve too far into that, but the reality is you're supposed to tell them the exact amount you have as of the day you fill out the financial aid forms. But once again, when financial aid offices ask to see verification documentation to kind of check your numbers, the main thing they're going to ask you for is your tax return. And on your tax returns, it's going to show them the amount of interest, dividends, and capital gains that you've received over the course of the previous tax year. Now, of course, if you don't have any capital gains and your investments, like a crypto or a stock, don't pay any dividends, then essentially there's no way for them to know how much you have in total or have as far as assets at all. So once again, it's on the honor system. So I leave it up to you how you handle that. But now, this is the interesting part. The moment you elect to sell that holding and essentially take the gain on it, take the capital gain on it, you fall into one of two categories. You fall in either into a short-term capital gain or a long-term capital gain, and both of these have big implications on the tax side. On the financial aid side, the reality is the financial aid office doesn't care if you have a long-term capital gain or short-term capital gain. All they care about is the gain that you have that's showing up on your taxes. Once you capture that capital gain, you automatically technically get taxed twice. The first taxation is going to be essentially from Uncle Sam, i.e. the IRS. And the second taxation that you're going to end up getting is going to be from the financial aid office, in the sense from the loss of financial aid eligibility based on the increase on your income because of that capital gain. Now, as I mentioned once before, the short-term and the long-term capital gain structures basically will differ dramatically. Now, let's use the same example. Let's say you have that $15,000 gain basically locked in because you took the capital gain because you sold the holding. If you did it within a year, so basically the time that you bought the crypto or the stock, if it's been less than a year since when you sold it, then essentially your capital gain is looked upon as a short-term capital gain, and the amount you're going to be taxed on the capital gain will be anywhere from 10 to 37%. Now, if you had held it for longer than a year, then essentially you're looking at capital gains of anywhere from nothing to essentially 20%. So obviously holding it for longer than a year from a tax perspective is a lot more beneficial. Now that's the tax way of looking at it essentially. Let's look at it from the financial aid point of view now. Let's use once again the same $15,000 capital gain. Now let me go over the impact of incomes between $25,000 to $50,000 of adjusted gross income, by the way, because that's what financial aid looks at. I'm going to show you the impacts of adding that extra $15,000 of capital gain on your financial aid eligibility. So as you can see here in the charts, obviously in the beginning portions when you have the lower incomes of $25,000 to $30,000, the impact on the Pell Grant is small. The amount you lose essentially by locking in that capital gain of $15,000 is not big. And the incomes I'm using here, by the way, are the parent incomes, and it's the adjusted gross income numbers for the parents. Because remember, on the FAFSA form, the CSS, and every other financial aid form available, you're going to have two sections. The parent section for their financial information and the student section. So in the beginning stages, obviously the $25,000 and $30,000 levels, when you guys are getting Pell Grants all the way even to $50,000, what you'll see is there's not much of an impact if you guys throw on $15,000 of capital gain on the parent side. But what you're going to notice is, unfortunately, good, bad, or indifferent, it's going to be a lot different when you do this on the student side, which I'll show you in a moment. So as you can see here, the first two levels, until you get to around $40,000, the Pell Grant does not shrink that much by taking that capital gain. So it's something to think about if you want to lock in gains for this tax year before the tax year ends. Let's look at it from the other perspective. What if it was your student that is trading crypto or stocks and is looking to lock in those gains? How will that affect you guys from the financial aid point of view? Now here I have those numbers to show you how much of a bigger impact it was going to be if your student locks in that $15,000 gain versus you locking in that $15,000 gain. What I did here was I indicated what happens if the parent's income stays the same. So the parent's income is the $25,000, $30,000, $40,000, and $50,000 levels. And then on the next side of it is the student locking in a capital gain. So it's the parent income plus a student taking capital gain of the $15,000. And this is what happens. As you're going to notice here, in the first two levels, the $25,000 of parent income and $15,000 of student capital gain, the first two levels, there's not much happening as far as $25,000, $30,000 of parent income. And the reason you're not seeing much of a drop in the Pell Grant is because it's the parent's income being at that $30,000 threshold and below that's actually technically triggering the machine, the calculation of the FAFSA, CSS, etc., not to count your student's capital gain. But what you're going to notice is once you exceed that $30,000 level here, what you're going to see is you have a giant drop, basically off a cliff essentially, of how much Pell Grant you guys are losing. So you might be thinking, well, Ed, we're still ahead. Even if I'm at 40 or 50,000, I still locked in a pretty good gain because the tax man only took a little bit, then the financial aid only took a little bit. I still have thousands of dollars of capital gain that I basically made. And this is the error in understanding this process for a lot of families out there. I'm showing you guys here the loss of Pell Grants. What you need to understand is there's technically three levels of financial aid in the world of college. There's the federal government's money, the Pell Grants. There's the state's money, which is also provided to you guys if you guys are getting Pell Grants. It's very likely the state that you reside in, if your student stays within that state, is also getting that money from that state. And then level number three is the school's own money. So the school's giving you grant money. If you guys are losing $5,000 in Pell Grant, you're also going to lose $5,000 in state aid, and you're also going to lose $5,000 from the school if they're giving you money. So if you're losing $5,000 in Pell Grants and you think we're still ahead, you are not ahead. You're now technically losing money because you lost the money from the IRS, you lost the state money, you lost the federal money, and you lost the school's money. So altogether, you've already lost more than the $15,000 gain that you had. So you have to know what you're doing in this entire process. If you're not sure, down here in the description, I have the expected family contribution calculators. Run the numbers, figure out for yourself where you guys fall in line. And all that being said, we also have another video here if you guys want more insight about the expected family contribution calculators and the net price calculators. Right here in the description is the link. I go a lot more in depth about how these calculators work to give you more insight, more information for yourselves to help your cause. Now, all that being said, if you did enjoy today's video, please leave us a like. It does help the channel. As well as if you have any comments or questions, once again, please leave them down below. We do answer all the questions and comments you guys have. Also, in addition, once again, If you have a student this year who is a senior, please watch our video here for the James Russo Memorial Scholarship. This year we're giving that money away, the $15,000, hopefully based on the amount of views you guys give us, to senior class this year of 2021. So the more views you guys do, the more comments, the more likes, the more subscriptions, etc., the more money we can give away for this year's senior class 2021. That being said, on the screen now is our contact information. If you have any questions or need help throughout any part of the process, whether it be financial aid or admissions, we do help families out with everything college related, financial aid forms, admissions, so on and so forth. So if you need help, just give us a call or shoot us an email. And other than that, thank you for watching today's video. Once again, my name is Ed from Principia Prep.